Check. Check. Also, mic 1 is acting up, so we're just using mic 2. So we have to mic everyone individually.
Hey, how are you? Yeah, good to see you.
There you go. That's all good.
This one's live now?
Yep. But we have muted you through the software, so people won't hear you.
Won't hear me cussing?
There you go. That should be good.
Super, thank you.
Good,
yeah? Okay.
I usually get John C. You know John C. Hoffman?
All right. Hey, everyone. So thank you very much for coming both online and in person. We have a very exciting evening ahead featuring 5 promising resource companies, followed by a keynote presentation from industry expert Frank Holmes. We ask that you please keep all of your questions until the networking session after all the presentations, just to make sure everything flows properly, as there'll be plenty of time to interact with management at that point. And also be mindful of the cameras, as we are live webcasting this entire segment to an online audience. And at this point, I'll send it over to our first company, Goliath Resources, with Roger Rosmus.
Thank
Starting
you.
us off.
Good afternoon. Thanks for showing up after a long week of PDACing. Goliath, we're good? Okay. Goliath Resources, we're a precious metals project generator. We're focused in the Golden Triangle and surrounding area of northwestern British Columbia. The common theme, or the underlying theme for Goliath is global warming. Essentially what we're seeing is rapid melting of the glaciers in the surrounding area, and more importantly, the permanent snowpack is no longer there. So what does that mean for us? We're seeing brand new outcrops of mineralization of gold, silver, and or copper at surface being seen for the first time in thousands of years on all 4 projects. Essentially, the business model is looking for brand new discoveries in world-class geological settings, which the Golden Triangle and area is known for, with the idea that all of our projects, or what we're looking to eventually achieve, is to tick all the boxes for any senior mining company to do a potential joint venture, strategic investment, or a takeout at some particular juncture. Our lead project generator, Bill Shornabay, he's had a lot of success using this business model. As we all know, it's a super high-risk business that we're in. Bill initially discovered the Golden Mile here in Ontario. That eventually got sold to Argonaut for $320 million. He originally staked the Coffee Creek asset, the Supremo Zone up in the Yukon, and I think we all know that was taken out eventually by Goldcorp for $520 million. And then more recently, $53 million joint venture with Newmont Mining Corporation. So we've got 4 projects, 2 in the Triangle, 2 outside of the Triangle. Our focus this year is going to be at our Lucky Strike property. The reason being, we've got logging road access. We're 3 kilometers to the main highway. We're 3 kilometers to the main power grid, 8 kilometers to the rail that takes you to a port, as well, very close to Terrace, BC. The special thing about Lucky Strike is back in 1884, there was a Bahamian prospector by the name of Harry McDame actually discovered placer gold in Lauren Creek. In a 2-day period, they pulled out around $600 worth of gold. To put that in perspective, gold is about $20.67 an ounce. Today's terms, that's about over $39,000 worth of gold. So that's pretty significant. So this essentially initiated a gold rush in the area. The creek eventually produced over 13,000 ounces of gold and is the most prolific placer creek in the entire district. And interesting point, the hard rock source has yet to be discovered, and that's the opportunity for us. So late in the season last year, a independent geo specializing in porphyries spent the entire career in this porphyry belt, co-authored many papers on porphyries, works as a consultant as well for Teck and Newmont at Galore, as well as working with Pretium. So she discovered this outcropping at surface, alteration of 1,200 by 700 meter zone. We've got monzonite porphyry center with mineralized stockworks of gold, copper, moly, outcropping at surface, never been drilled before, brand new discovery. The plan here, this is it right here. This is Lauren Creek. So the plan here is to build pads in June of this year and start drilling in July the 1st. Actually, we're building 2 sets of pads, and I can show you a little bit later here what the plan is to do, or what we're going to do once we confirm mineralization at depth. So back in 2017, we started doing some silts here. We had a high of just over 4 100 ppb gold, and we have some hits here with 100, over 100 down the creek bed, and here's our zone of porphyry. And I've got a short video here for you that gives you a bit of a model as to what we're looking at.
The Life Resources Lucky Strike property is situated in west central British Columbia, 40 kilometres north of Terrace. The property has logging road access and is only 3 kilometres to a major highway and high tension power. The property extends over 27,000 hectares. Goliath is pleased to report that 2018 chip and grab sample assay results, in conjunction with detailed mapping by a porphyry specialist, has confirmed a large outcropping area of copper, gold and molybdenum mineralization as part of a porphyry centre. The discovery was made at the headwaters of Lauren Creek, the most prolific placer creek in the area, where over 13,000 troy ounces of placer gold has been historically produced with nuggets up to 1.5 ounces. Along the headwaters of Lauren Creek, a series of silt samples were taken during the 2017 season. These returned multi-element anomalies, including copper, molybdenum, and gold values up to 406 ppb. The detailed mapping defined a large precursor granodiorite body that was subsequently intruded by a monzonite porphyry that is associated with a large 1200 by 700 meter alteration system that is cored by a zone of quartz sericite alteration. The core is coincident with a gold-bearing chalcopyrite and molybdenite stockwork that has grades typical of a porphyry system. The mapping also highlighted a spatial link between polymetallic, lead zinc-rich veins and copper molybdenum-rich porphyry centers. The discovery of this new copper, gold, molybdenum porphyry and outcrop is certainly very exciting. The upcoming 2019 drill program is being designed to test this new porphyry system that has the potential to quickly evolve into the next big discovery.
So, so as far as the grades that we got from last season, we had up to almost 3 grams gold, up to 4.5% copper, and up to 0.34% moly. Not typical of a porphyry system. Some of those grades did come from the polymetallic veining that we're seeing at surface. So the first pad will be built here, second pad about 30 meters just above the creek. Plan is to drill 3 holes, 600 meters each. Assuming we see what we're expecting to see or hope to see, then we'll continue down here and drill as many holes as we can through the month of July. And just to give you a good bird's eye view of what the terrain looks like, just another short video.
Goliath is pleased to report 2018 chip and grab sample assay results, in conjunction with detailed mapping by a porphyry specialist, has confirmed a large outcropping area of copper, gold, molybdenum mineralization.
Yes, we're down now.
Porphyry center.
This side here.
The detailed mapping defined a monzonite porphyry that is associated with a large 1200 by 700 meter alteration system that is cored by a zone of quartz sericite pyrite. The core is coincident with a gold-bearing chalcopyrite and molybdenite stockwork that has grades typical of a porphyry system. The mapping also highlighted a spatial link between polymetallic, lead zinc-rich veins and copper molybdenum-rich porphyry centers.
Okay. Essentially, this is a good shot of the stockworks and the veins and what have you. All this is on the web page under our presentation link. The next area that we're focusing on this year, which we'll drill as well, again at Lucky Strike, we've got Lauren Creek here down to the southeast. We've got our newly discovered gold source zone. That's in the Hazelton Volcanics and the Quack Formation. So this is more of a SK Creek style package of rocks we're looking at. The initial sample out of there ran over 3 ounces of gold. Last year, I guess our best chip sample was just over 22 grams per ton gold and 261 grams per ton silver. Again, plan to be building a pad in June and then drilling the end of July once we're finished up at our Lorne Creek porphyry. And here's just another short video to show you the terrain and what we're looking at.
On the southern regions of the property has resulted in the discovery of a new zone of mineralization, gold source. A quartz vein and hydrothermal breccia corridor has been mapped over 1,500 by 200 meters and remains open in all directions. The trend is highly oxidized, with primary sulfide contents typically between 1 and 5% that are now represented by limanitic voids and boxworks. Late in the 2017 season, an angular float sample of mineralized breccia was taken 65 meters downhill from the newly discovered outcropping breccia and returned 96.8 grams per ton gold, or just over 3 ounces per ton. A 2-meter chip sample from this season returned 22 grams per ton gold and 261 grams per ton silver.
Yeah, so that's like for Lucky Strike. And then up at Gold Digger, this property is just south of Stewart, BC, historically a prolific mining camp. Here we're developing a drill target for 2020. We'll spend about 8 to 10 days taking additional samples and doing some additional mapping. It's a fairly decent sized zone, 1,200 by 150 meters. And again, we're seeing outcropping breccia at surface. And the location is essentially within 2 kilometers of the red line. All the major deposits in the triangle have been found within 2 kilometers of either side of this particular geological line. Some of the samples from last year, at a high 113 grams gold, 272 grams silver, and some, decent size chip samples as well with some nice grades. So it's a series of this. You can see this breccia. This was the initial discovery in 2017. And again, I've got my geo, who's been nice enough to put a nice video together for us.
Resources has recently completed a short follow-up exploration program on its Gold Digger property. The property covers just under 16,000 hectares and is situated in the southern part of British Columbia's renowned Golden Triangle, approximately 25 kilometers southeast of Stewart. Dolly Varden is situated 7 kilometers due east of the property, where there is an access road to salt water and infrastructure at Athabasca. The eastern side of the Gold Digger property is underlain by the Stevie Group that is unconformably overlain by rocks of the Hazelton Group. This contact is known as the Red Line and is thought to be a key marker in the Golden Triangle when exploring for significant mineralizing systems. Adjacent to the Red Line is Goliath's newly evolving gold corridor. Within the gold corridor is Gold Swarm, an area characterized by a west-northwest trending, steeply dipping vein and fault system that occurs within a wider 30 to 50 meter structural alteration corridor that can be traced on surface for over 1 kilometer and remains open. Newly acquired high-resolution magnetic data correlates very well with the fault system and defines a strong 5 kilometer long northwest-southeast linear feature that remains open and is believed to be associated with gold mineralization. 24 samples were taken from within the Red Line corridor that assayed from 1.25 to 113.5 grams per ton gold. Channel and chip highlights include a 55 centimeter channel that graded 29.7 grams per ton gold and 14.3 grams per ton silver, and a half-meter chip grading 47.5 grams per ton gold and 272 grams per ton silver. Extensive regions of recent snowpack and glacial recession on the Gold Digger property provide for large, unexplored areas of newly exposed bedrock with excellent potential for discovery of both precious and base metals.
Okay, so that's at Gold Swarm at our Gold Digger property. Roughly just over 105 million shares outstanding. Management team owns roughly 20%. Last year we traded about 90 million shares with a VWAP of 17 cents. Why invest in Goliath? Great quote from Rick Rule. Looking for junior project generators, ultimately what Goliath is. Also, Eric Sprott personally has invested at least over $45 million in the area, and I'm sure it's much higher, not including the Sprott Group funds. And another great reason, I don't know if you know Garibaldi, they were in the triangle. They were following up on a breccia outcrop 2017, stock trading at 12 cents. They hit, stock went over $5 a share. That was about a 44 bagger. If you sold at the top, Another prime example, what can happen in the triangle, GT Gold chasing porphyry with soil sample, went from 22 to over, $2.76. That would have been about a 14 bagger for the investors if they sold at the peak. Essentially, Goliath is one hole away from massive paradigm shift. You can see the market caps of Garibaldi GT prior to drilling, where they're currently trading. This was taken as of yesterday with market cap of 6.3 million. We're drilling a monzonite porphyry outcrop, and we've got a hydrothermal breccia outcrop we're drilling as well. So in a nutshell, I think investors have a tremendous opportunity to buy our stock essentially near its 52-week low, prior to getting mobbed into the field, prior to drilling, and prior to results. So I do believe if we confirm mineralization at depth at either one of our targets here, I would imagine there'll be explosive upside for the investors that come in at this level. So the net takeaway, now is the time to be buying our stock. Thank you. Questions, I guess?
We'll save the questions after.
Oh, okay.
Thanks, Roger.
Cheers.
Good. Now we'll set up Sitka Gold. Next will be coming up.
We have it all recorded. So it's all recorded, so we'll send it off to you.
Okay.
Yeah, it was great. Yeah. Nice sticking around. Yeah. Great. Yeah. For sure. Hey, I'll just mic you up in a second.
Hello, everybody. Is the mic on here outside there? All good? Okay, well, get started here. I'll be making some forward-looking statements for sure. So one of the things I'd like to mention is that about is this mic on?
This mic should be working.
Yeah. Yeah. So this mic's not working?
No, this mic is for the outside.
I see. Okay. What about this one?
Exactly. That's what
Okay. Okay. Speak up is what you're saying. Okay. Well, anyhow, this is, I've got a lot of slides to go through here. There's 37 slides, so I'm going to be going pretty quick. And it's on our website, so you can always dig it up and have a look at it there too. Sitka Gold, it was formed and went public last year on CSE. We raised 1.2 million at 20 cents. And the founders of Sitka Gold were the previous founders of a company called Tundra Copper. Tundra Copper we formed in 2013, and 18 months later we had developed a property up in the tundra enough that one of Robert Friedland's companies bought us out. So we were still private at the time. We were planning on going public, but it was at a very good premium for the shareholders. So Sitka Gold has some experienced management team that has had success in the past. We have 3 assets right now that are drill ready that we're focused on developing. One is the Alpha Gold property in Nevada. The next one is the Burro Creek Gold property in Arizona. And then we have the Copper Line River property up in Nunavut. As I mentioned, we're experienced explorationists, seasoned, successful. We've got deposits, discoveries in the past, and we're very comfortable with moving forward with this group. Our shares capital structure, we've got less than 20 million shares out. Fully diluted would be just over 30 million, and about 36% of that is owned by management. The first property I'm going to talk about is the Alpha Gold property. It's located in Nevada, and it's a Carlin type gold target. Probably everybody here is pretty commonly familiar with the Carlin type area, the district. It's got over 30 producing mines and has I think 84 million ounces produced to 2016. So very prolific area. These deposits, they line up on certain trends and at certain intersections of these trends with anticlines that are preserved in the right rocks. Alpha Gold, the mapping there shows that these carbonate rocks are preserved in the area, and they're located on a trend of the projection of the Cortez trend and Garden Valley anticline. The area is very active. McEwen Mining is putting the Gold Bar property into production as we speak here, and it's a world-class district. It's good real estate. Our targets are ready to drill, and they're permitted. This is a bit of a cartoon map, but it shows how these deposits line up along these trends. This is the Cortez trend here, and those three elephants are basically three deposits that total over 50 million ounces. Our property, Alpha Gold, is along the projection of that trend with an intersection of an anticline that we believe is very prospective to carry the right rocks. This is just more of a look at the geology there and reinforcing that these northwest trending anticlines and these northeast trending structures, where they intersect, that's where you usually get a lot of the Carlin type deposits. This again just reinforces that. And it shows you that at the Gold Bar, they have the same kind of a situation where you get an intersection of these trends with the anticlines. You end up with a deposit a lot of the time. This is a longitudinal section of that area, and it shows a lot of the Roberts Mountains anticline has been eroded, and yet it still has produced prolific amounts of gold. Where the Alpha Gold property is, that lower plate unit of carbonates is preserved, and we believe that because of that, this is a section of the property. It shows where our target area is. Basically here, it's at a mineable depth. We're figuring it's about 1,000 feet deep there to go through that. So we're pretty excited about that. Again, it's in a very good area, good real estate. It's got excellent infrastructure, positive jurisdiction to work in. It's ready to drill. This property is in Arizona. It's called the Burro Creek property. I know it really well. I worked there back in 1988. We were going to put it in production at that time, and then the price of gold fell off a cliff and it never recovered for many years. The property went back to the owners. So what you're seeing here is a part of that vein sticking out of the surface, and that's where everybody focused on drilling the property. It's located just west of Baghdad Copper and southeast of the Moss mine that just went into production a couple months ago. It's the newest gold mine in the US right now. Snapshot of the vein on the property. It's a low sulfidation epithermal gold silver vein, and it has bonanza grades within it. It's got a historical 2011 43101 resource of around 5 million ounces of silver and about 100,000 ounces of gold, split pretty much evenly between the indicated and inferred categories. As I mentioned, it was permitted to go into production in the 80s, never happened. It was re-drilled in 2008, and this 43101 was calculated after that. There's been no other work except for some soil sampling done, and that's what got us excited about acquiring this property, is that the soil sampling survey actually shows that this vein probably has only about 5% of the structure explored This is just a tally of the resource, the historical resource that was done. It shows the vein. It's over 40 meters wide at this point. And again, you can see it's going right up the hill and kind of gets buried into the mountain. Some of the drilling intersections here, I take the bottom one there, 030. It had 4.6 meters of 8 grams per ton gold and 192 grams per ton silver. But within that was bonanza grades of a meter of 32 grams per ton gold and 759 grams per ton silver, or an ounce of gold and 20 ounces of silver. So it's a big vein, but it has high grade zones within it. This again just demonstrates the different grades within the vein itself. This is a slice through the vein, down dip. Now, after this drilling was done in 2008 and they calculated this resource, the last thing the company did that had this property was they did a soil sampling survey from where the vein was known all the way to the south, 1.5 kilometers. This area is covered by a bit of an andesite, a volcanic rock veneer. So you can't walk and trace the vein. We always thought that it did extend underneath these volcanics, but this survey kind of endorsed that definitely you got a gold anomaly traced right through that whole area there, which is pretty indicative that the vein is persistent for 1.5 kilometers to where it outcrops again in the south. So this area has never had any drilling. It's ready, basically ready to drill. And our plan is we want to fence this thing and put about 50 drill holes into it and see if we can up that resource substantially. So it's a mile off the main highway from Vegas to Phoenix. It's excellent access. The known deposit is on private property, and part of what comes with the patented claims are water rights. So you don't have to go looking for water if you get to the milling point. So limited mapping, but no geophysics, but this mobile metal ion geochemical survey has definitely worked down there and given us a huge target. Excellent potential for expansion. Our third property running along here is in the Coppermine River district of Nunavut. This is a very massive unexplored area that has been known about for years, but because of its remoteness, it kind of has never been really properly looked at. Now with the Northwest Passage opening up, this is only like 30 to 40 kilometers from tidewater. So it's a game changer having that passage open. That's where it is in Nunavut. We got a 50,000 hectare land package. It's 100% owned by Sitka Copper or Sitka Gold through its subsidiary Arctic Copper Corporation. And there's a community nearby called Kugluktuk. It used to be called Coppermine, that has daily jet service to Edmonton and other places. And the native land claims have been settled up there. We have both volcanic hosted copper and sediment hosted copper showings up there. And this is just an example of what you could end up with with those type of deposits. You know, you're talking tens of billions of pounds of copper. And we're pretty excited because we found just kind of boiling up frost heaves in the middle of the tundra, a copper showing that's sediment hosted. And when we assayed it, it came back at just under 14% copper and a couple ounces of silver. So we went back in there. This is where it's located on our claims. These are the red is all of our claims there, that 50,000 hectares. We went back in there and looked at it some more and realized there's a large dike here called the Mackenzie Dike. That's an old dike that we believe could have acted as a dam for hydrothermal solutions coming up and pooling this copper and dropping it into the sediments. So our new shoring is copper reef. It's on the east side of this dike, and we're not getting the copper when we're prospecting on the other side. So this is just a bit arm waving, but if it's true, it could be a massive deposit. We ran one gravity line across where we got this high grade copper, and we ended up with an anomaly this is where we found the copper showing, and this anomaly here is about 100 meters wide. So we were pretty stunned with that, and we'd like to do some more work on that before we drill it. We're financed to do some more geophysics work up there, so we're going to do that this year. We also have high grade copper in the volcanic rocks, up to 42% copper, and these veins are super high grade. This is where the wind showing is. Some of that material is high enough that you don't even have to have it milled. You just ship it right to the smelter. So that's kind of our Coppermine River project. It's a huge district. This map here is over 100 kilometers long for the scale, to give you an idea, because you probably can't read this here. But yeah, and that's pretty much it for Sitka. We're a newly formed company listed last year, and we're focused on gold, silver, and copper. And we're seasoned, successful explorationists with 3 excellent properties that we're looking at drilling in stable, reliable mining districts. And again, we already have a bit of a historical deposit to start with in Arizona. We like that. But we also have a good chance of hitting something pretty impressive in Nevada there with our Alpha Gold property. And like I just mentioned, the Coppermine River project isn't too bad either. So thanks very much, guys.
Perfect. Thanks, Cor. Next, we'll be hearing from Pure Point Uranium, Chris Frostad, President and CEO. We'll set it up now.
And it's 15 now. Oh, it was right. There you go. Oh, that'll do too. That'll do.
Down arrow. Get it down here, and then what we're saying is this mic hooks over there. So
Right.
it's on in that area.
So everybody's got to hear me unmiked here.
Yeah, yeah.
Sorry.
Yes.
So is it down to go forward?
Yeah, down.
So that petition is, the resolution says, right now scheduled for April 15th. We're hoping to see that when that happens, we might start seeing some U.S. Contracts coming into play as well. Another thing that's happening is there has continued to be new demand. So as many reactors as got shut off in 2011, by the end of 2017, enough new reactors have come back online to replace them, despite the fact that most of the Japanese reactors still haven't come back online. There's 8 new reactors brought online last year. There's 57 under construction. So there is an increasing demand or an ongoing demand for growing nuclear power. I think we're looking at 2 to 3%. It's not a hockey stick by any means, but it will continue to grow in the near future. As a result of the price shifting, I should mention Kazakhstan is producing uranium for around $20 or less. So they're really elbowing themselves into this market. And so a lot of the higher priced uranium producers have started looking at shutting down. Paladin shut their mine down in Namibia. I'm not sure that one will ever come back online. Cameco, to help right-size things, has shut down the Rabbit Lake, shut down McArthur River, which is the largest producing mine in the world. And then we're also looking at others coming offline. I know the Ranger mine is now getting ready to shut. Rosin got sold to the Chinese recently. So there's a lot of the higher end producers are starting to cut down production. And finally, Cameco has, because they've been shutting down these mines, they're actually buying uranium on the open market to fulfill their sales contracts. Last year, they bought about 1/3 of their uranium on the open spot market to fill contracts and reduce their inventories by about half. This year, they're projecting that they'll be buying about 70% of their uranium on the open market. So all of this is going to is soaking up this excess inventory. We've seen the spot price begin to rise, and we hope that will lead to things coming back. As far as Kazakhstan is concerned, after they did announce that they were going to reduce their production by 10%, which they did in 2017, they then announced that they were going to reduce it by another 20%. We're in the year over 3 years. We're into the 3rd year, and they haven't yet started reducing those production. So we're not sure what sort of an effect they're going to have and contribute to us going forward. So what we're watching when we watch the price of uranium is this. What we've seen is in black, you're looking at the long-term contract price of $30 to $32. It's been lying flat primarily because there have been no significant contracts signed in over 2 years. The market tends to watch the spot price, but really it's a smaller piece of the market. So what you see in orange there is the spot price. Over the last year, we saw it rise from about $20 up to $29, $28. And what we expect to see is that it gets closer to the long-term price or even exceeds the long-term price. There's going to be more and more pressure to move those contracts forward. But what we're going to see, because the marginal cost is up here at $40, is when we do start signing contracts, they're not going to be at $30. The producers have all taken their lumps, they've shut their mines, they've laid off their staff. So the first significant contracts will be coming in at more of a $40, $45, $50 level. So what we're expecting to see is a bit of an alley-oop when this does finally happen. When it happens, of course, is the big question, but the market really seems to be looking forward to this and anticipating that there's far more buzz in uranium now than there was a year ago. We operate in northern Saskatchewan, the Athabasca Basin. It's a bit of a freak show in that you typically mine uranium around the world at 0.4, 0.3, 0.5% ore grade. All of the deposits in the basin, for the most part, are above 1%, with Cigar Lake and McArthur River coming in closer to 20% ore grade. So it's the place to be. As uranium goes out of favor, this area never seems to. And again, it's primarily because of the grade. So we operate, as I said, in northern Saskatchewan. You can see on the map up there where the Athabasca Basin is. It's basically a big bowl in the Canadian Shield that's full of sandstone, apparently full of uranium. The orange projects you see there are ours. We've been working up in Saskatchewan for a little over a dozen years. We've worked a significant amount of property, made significant amount of investments in these, getting them drill ready, getting targets ready. We've done initial drilling on a lot of them and started to have some pretty good discoveries in uranium. The two projects you see on the right here, Hook Lake and Smart Lake, are two projects that we joint venture with Cameco and Areva. And over the last few years, because of the markets and the way they've been acting, we've, for the most part, put most of these projects on hold and focused almost exclusively on Hook Lake. And that's a partnership with Cameco and Areva. We own 21% of that project. We're the operator. Cameco and Areva split up the remainder of that. And it's really allowed us to operate efficiently and I guess in a healthy manner during a time when it's been very difficult to do that. Kind of the economics of the project have really worked in our favor over the last little while. This year, for instance, we have a $3 million program. That means that I have to come up with my $630,000 for that program. I get paid back $300,000 as the operator, so it costs me $330,000 to do a $3 million program. And I get my news, I get my people working. We're making good discoveries out there. It's a very exciting place to be working right now, and it truly has allowed us to operate safely and maintain and carry our other projects forward. Just to skip through this right now, we're a fairly stable stock, and I think a lot of that has to do with our partners and with this particular project and where we are. I'll get into in a second. We trade well. We trade 3, 4, 500,000 shares a day, every day. We trade 6, 7, 8 cents primarily every day. So it's been fairly stable during a time when a lot of our peers have been fairly volatile. But again, I would lay this back on the fact that we're getting constantly funded by partners, and they're good partners to have. So where we sit is in the southwest edge of the Athabasca Basin. I'm not sure if you may well be familiar with Fission's Triple R deposit. It was discovered a few years ago. Just north of that is NextGen's Arrow deposit. They're along a trend known as the Patterson Lake Corridor, and it's a structure that is really controlling all of the mineralization we've been seeing along there. So the star you see the furthest down, that's Fission's Triple R. It's about 100 million pounds of uranium that they're developing right now. Just north of that is NextGen's Arrow deposit. It's a little over 200 million pounds of uranium, and again, they're moving fairly rapidly on developing that. As we move a little further north, you see the orange boundaries of our claim line. We found a smaller deposit right at the border that we refer to as Spitfire, but our focus now is moving north and looking for something much larger. And again, where you see those stars is where we've been finding pretty significant mineralization to date. Again, the grades of our exploration holes have been upwards to 50%. So it's quite an exciting place to be drilling. How am I doing for time?
We're good.
Good. So as we look at these corridors that go up through here, again, you can see Triple R, Arrow, our Spitfire. We're focusing now further as we get up to the north, and it's been interesting to work with our neighbors. It's been interesting to work with Cameco and Areva because obviously, or around as referred to now, because they've had their hands on pretty much every rock and every deposit of the basin, and they're fabulous partners. Not just are they sending us checks regularly, but we do spend a lot of time with their technical folks, and they do, although we do a lot of the planning and the work in the field, they do spend a lot of time with us and share a lot of their knowledge and information with us. Along the Patterson corridor where we're seeing the deposits, there are actually two corridors that are parallel to it. Dirksen, which is the one to the south, you see there, up until Fission had their discovery, the best hole on this side of the basin was that DER04. And once things started to happen next door, we pretty much left it alone. So we've gone back and we're focusing on that one as well this season for the first time since '85 when they found that particular spot. So again, this year we've got $3 million in drilling. We're doing about 6,600 meters. We're also doing a lot of geophysics along the way, but we are focusing along that one corridor. It's about 8 kilometers of the structure that we're testing these days. So there's a lot of area to test. We're finding good results along the way. South, you see Spitfire in green. We've done a few deeper holes there. This season, primarily, we're up at what we're calling our Dragon Zone to the north. We're doing some drilling over on Dirksen and some geophysics in the center there just to fill in those holes so we can get back there and test that up in the coming year. Again, we're like many people in this sector right now. I can say by our count, there's only 14 public uranium companies left on the planet. So we're very fortunate to be here and very fortunate to have some good work to do from year to year. But we do have a full pipeline of projects in Saskatchewan. And this table just shows those 10 projects. We've spent upwards of $30 million refining them, getting them down to a point where the targets are very clear to us, where we have been doing some initial drilling and finding some good mineralization. And we're very anxious to get back there once we see the markets rise again, hopefully in the next 6 to 18 months. Check your calendar. And that's it for me. So thank you for your time.
Perfect. Thank you, Chris. Next, we'll be hearing from West Red Lake Gold Mines, Tom Meredith, the Executive Chairman.
So that just mics to the,
Yeah, that mic's to the
that, and I,
right, and then that mic's going to hit the outside.
this one,
Yeah,
that moves it forward. All right. Hello, everyone. I'm Tom Meredith, the Executive Chairman of West Red Lake Gold. So we're a single project gold company in Red Lake. We have a partner with Goldcorp. I mean, just to give a summary of where are we in the gold space these days. The biggest capital pool in the investment world is the bond market. Bonds treat gold as a AAA zero. The bond market treats gold as a AAA zero coupon bond. When interest rates go down, bonds go up. So what we're seeing now in the bond market, in the interest rate market, is that the central banks their ability to raise rates is stalling out, and what we're seeing is a possibility that rates will start coming down later in the year. That should draw major capital into gold, and the large gold stocks and the speculative capital should follow in on after that. I mean, that's why we're in this game of junior mining stocks. At the end of the day, you can have good projects, you can make discoveries, but if the market isn't there, you're not going to get any lift, and people invest to make money. So if you have a good project and you're at the right time in the marketplace, and we think that that time's coming fairly soon in the number of months or a year, then we have a project that has a decent chance of getting a good lift because we have a measurable resource, and we have something that investors can measure their investment dollars against in terms of resource and value. So with that, I'll take you through our program, our presentation. We're in Red Lake. Red Lake's produced 30 million ounces. That's where Goldcorp was founded. Our project's situated on key geology in Red Lake, about 20 kilometers west of Goldcorp's main mines. There's 3 former mines on the project, on that key geological east-west trend. And we have a resource that's a little over 1 million ounces inside, and we have good potential to increase that resource. And we have significant exploration potential on the property. So we're going to continue to explore our property, and we have Goldcorp as a partner, a funding partner. Goldcorp has 2 mills in Red Lake. One mill's full, the other mill's runs on and off. They need additional feed. They're looking for additional projects that can feed those mills over time. In terms of our team, before this company, I've been with West Red Lake for about 5 years. I worked on a company in Timmins. We had about 4 former producing mines when I started. There was 2, we bought a couple, so we ended up with 4. We started with 60,000 ounces. We got it up to 2 million ounces by the time we sold the company for roughly $200 million in stock. So we did make good money for our shareholders. And we're essentially looking to do the same thing again with this company. John Hessup's our vice chairman. John's an experienced geologist. He also put a mine into production. One of the ones that Goldcorp was operating in Timmins, the Hoyle Pond mine, was one of the mines that John put into production. I have experience putting mines into production, although that's not what we're interested in doing here. We're just interested in developing a property, increasing the value, and selling it at the right time in the market to a mining company who actually wants to operate it as a mine. So we're explorers and developers. John contacts our president. John used to be the president of Victory Gold Mines, which that's an old Pamour open pit mine near the Black Fox mine in Timmins. Cisco Mining now owns that project. Ken Geyser, exploration manager. He worked with me at PG Gold. He's got 30 years experience in Northern Ontario. He's a great project manager. Dan Crandall looks after the accounting issues. And Michael Dane's a former Goldcorp senior geologist and knows the Red Lake camp quite well. Our shares outstanding, we have 130 million shares outstanding. We're trading in the 7 to 8 cent range, so we've got a market cap of roughly $10 million. So here we are in Red Lake. What you see here is the entire Red Lake district, pretty much. You can see on the right-hand side, there's the Goldcorp package, which includes the Red Lake mine and the Couche-Nord mine and the Campbell mine. The Red Lake mine is where they made one discovery that really made Goldcorp a success, a phenomenon in the gold mining space. It used to be called the Dickinson mine in the old days, and it had a market value of about $50 million. They discovered one zone that took the value to $8 billion. That zone was probably about 120 feet long by, say 40 meters long by 30 meters wide. So in Red Lake, you can find discrete zones that are of very high value. And because of the geological structure, you can see there's a north-south and east-west type of structure there. Those can create the folds within the rock that can allow you to find very rich, high-grade zones. Just south of Goldcorp is Premier Gold's Athabasca property, and south of that is Pure Gold. Pure Gold's getting their project, they're developing it, getting it ready for production. And to the north of that is the Phoenix project, where Rubicon is working on getting that project ready for production. And we're over to the west. You can see that the outline is in red. There's 3 former mines on the property, as you can see, identified by the 3 red stars. The one in the center is the Rowan. That's where we have a resource, a 1 million ounce resource. And that's between about surface and, say, 500 meters deep over about 1 kilometer strike length. This shows the property ownership. The best part of the property is the part that we have in partnership with Goldcorp, where the Rowan mine is. To the west of that is the Mount Jamie mine, and to the east there's one little cutout, the Red Summit mine, which does have some good exploration prospects there. Those mines were put into production in the 1930s. I like projects where you have a number of former producing mines because it shows you that there's some good potential economics in the geological structure. So the main part of the property that we're focused on is the Rowan mine property, which we have in joint venture with Goldcorp. Now this slide shows you where the Rowan mine is on the left and where the resource is situated. It's about roughly 500 meters deep. We can drill deeper. It's very expensive to drill deeper. We put one hole down 1,000 meters and did hit the same rocks. But from the perspective of raising money and drilling deep, expensive holes, we decided that in the future we're going to actually, and we did our first program at the end of last year, we're going to focus on the NT zone where there's potential for another deposit. We did put out some, and you see in the middle where we show the NT zone coming up and intersecting with the east-west structure. So the Rowan mine and the Red Summit mine are on an east-west structure, and then NT zone is coming up from the south, heading to the north. So we're looking into the NT zone area now. We started at the south end and we got some good drill results on that, which we reported at the end of January. Getting back to the Rowan itself, our resource is just under 1.1 million ounces of 7.5 grams with a 3 gram bottom cut. If you go to a 5 gram bottom cut, the grade is just over 10 grams, and you have about 850,000 ounces. So we have a good resource to start with in terms of scoping out potential economics on a project. There's something there to work on. This shows you the mines, the 4 zones at the Rowan mine, the 4 key zones that have the resource. The northern one is a 101A zone. And then you've got 3 other zones parallel to it. And that's where almost all of the resource is situated in those 4 zones. We are actually doing some internal scoping studies on the 101A zone, where we see a potential to start up the initial startup. You'd work on a future mine plan. As I mentioned, we wouldn't put it into production. We'd let somebody else do that. There was some historical work done on the next zone down, the 102 zone, which had about, I think it was about 14 grams in the old report that they had there. So you've got some high grade areas that you can get gold mining started on this project. The idea is to make this project attractive to another mining company. So when we have a good opportunity to sell the company and make money for shareholders, we've got a real buyer for a real project. So that's what we're focused on. This shows you in the 101A zone out at the east end. It shows you the part of the zone that would be mined. You can see the old historic mining was over to the left. And on the lower part of the slide, there's a conceptual ramp that's being designed by engineers and to access that zone between surface and about 500 meters deep. So that would have a mine life of roughly 7 years, and that would get the project started. So for a mining company coming to buy a project, we've got a project fleshed out for them. Now what we're going to show you is, if you look, you can see the east-west trending structure with the 3 mines on it, and then down at the south, you can see the red circle. That's where we started drilling the NT zone, which is another gold-bearing structure. It's about 100 meters wide. It's got high-grade zones within it. So there's about 2 kilometers of strike length. The southern kilometer is fairly straightforward and fairly easy to drill off. So that's where we've started at the south end. We're going to continue marching our way to the north. We covered the first 250 meters. Our best drill hole was 14 meters over 7.8 grams. Below that, we got another hole that was, I think, roughly a little over 9 meters of, I think, close to 6 grams. So you've got, within these structures, you'll find zones that are maybe 30 to 50 meters long, and typically they go to depth. So the idea is to find 2 or 3 of those that have a good volume of high-grade gold in them. And it looks like we've found one so far, and there's probably 1 or 2 more in this area. So that's what we're going to work on over the next couple of years. It's shallow drilling. We see the potential to create another gold resource here that could be accessed by a ramp, just like the Rowan was. Further up along where you see it bend, that's where the geology gets complicated. Complicated is more difficult to explore, but it's also where you can find potentially large gold deposits. For example, the kind of deposit that Goldcorp has at the Red Lake mine, which is why Goldcorp is a partner with us in this project. They're interested in what we call the structural intersection, or where you see the structure bend, because in those bends you get folds which create potentials for big fat deposits, something that would be the shape of a cigar instead of a razor blade. And where at the Red Lake mine, as I mentioned, was sort of 30 to 40 meters in diameter. That's what created all the value. They see the potential here. So as we go along and develop a deposit or a second deposit that could be mined, Goldcorp's looking for a significant deposit. So if we're lucky, we'll find one of those here. Oops, I've gone the wrong way. So just to sum up, our strategy is to continue to develop the project by building resources, by advancing the project with mine planning, permitting, and building up a decent resource is attractive to the industry. A couple years down the road, when the market's strong and people want to buy, we're like a land developer. We want to sell at a high price. And with luck, Goldcorp will find something really significant and make it even more valuable, or they'll buy us and take us out. So that's our story. Thanks very much.
Perfect. Thanks, Tom. And our fifth company presentation will be from Central Timmins Exploration. We have Charles Graba, the President, CEO, and Director.
Okay. There's room for almost everybody in now. And that's that'll allow. That'll go. Hello, my name is Charles Graba. I've been working in the Timmins camp since 1980. David Mason, sitting there, was one of my directors in 1986 when we took Manita public, or one of the oldest companies on the Toronto Stock Exchange. I'll go through a little bit different this talk. I'll just basically give you guys a quick overview of the Timmins camp. Anybody that's older has seen plays in the camp. Hopefully we're the next play. A disclaimer. Basically, Timmins is one of the great areas of the world to work. We've got all the local contractors, drill contractors. You can work 12 months of the year. So it's a pretty straightforward place to explore and mine. CTEC, we just went public last November. We've raised about we've got $1 million, $1.25 million of hard cash in the bank, $1 million of flow through. So we're one of the fairly well-financed juniors. Myself, I put the previous company claim post together and switched over to the frac sand business. Brought a bunch of oil guys in on the frac sand, so I bought the gold assets in Timmins back from Claim Post, and we formed a new and did an IPO and listed a new company. We got Neville, Julian Kemp was my CFO at St. Andrews. Wes is here. John Sullivan, I worked with him at Hudson Bay and Noranda, a very experienced geologist. Over the years since 1980, I've worked at virtually all the gold mines except the Dome mine and some of the new mine trend mines, but I was manager of engineering and geology for Pamour. So I reopened the Hollinger. I found number 3 pit. I sold Buffalo Anchorite that you ended up exploring beyond what we did. When I was president of Manita, we found the Michaud deposit. When I was president of St. Andrews, found the Taylor deposit that's in production. So I've had my fingers in just about every discovery in Timmins in terms of the ones that are operating mines right now, the latest crop of operating mines. But what's really helped me sort of evaluate, from 1980 till now, I've had fairly continuous exploration programs. With Pamour, we increased the reserves from the 2.5 years reserves to 8 years reserves. I've explored continuously with Manita for 10 years, and then explored with St. Andrew Goldfields. But so I've always looked at the new changes in technology that allow us to look through 25 meters of sand and gravel and clay. Most of the normal exploration techniques don't really work when you're working in a brownfield area that's got houses, pipelines, virtually. But in the last 10 years, MMI, geochem technology has come along. Some of the geophysical systems are working better. But the database in Timmins is very large. For example, there's 200 published master's and PhD thesis papers published on it. So you have multiple airborne surveys in places. So you have a very big database, but to find a new deposit's difficult because you got the ones that outcropped are found, or the extensions of the old mines have been found. What I'm looking for is the mines that haven't been found. Claim Post, over the last 15 years, we've put, between Claim Post and now with CTEC, put together about 20 square miles of ground, and we've simply broken it up into townships so that we can describe the properties better. This is the Deloro Township, Ogden Township, Mountjoy Township, and then we call the Four Corners. It's when you have multiple smaller properties, it's difficult to describe to people what you really have. This is looking at the old camps in an overall basis. There was a good talk at the start of the roundup in Vancouver this year that half the major new 5 to 10 million ounce deposits are found in old camps. So this is a Canaccord slide that just came out. You know, in Red Lake, you got the Great Bear discovery, and that may be the next large one. The south zones of Kirkland Lake. What's missing in Timmins is this area west of the Hollinger, north is in that direction. In Timmins, you basically, on a 30-mile strike length, you basically have two parallel gold systems. They're on the south side of the Dester here. Then on the north side, you've got the Pamour system, the new mine trend that was discovered, went into production in 1980. And then you got the parallel Hollinger dome trend. And then Tahoe, or Pan American now, you got another two systems. Like Tahoe's main work is now done on this deposit. So I guess I have a different viewpoint of the camp. This new mine trend is produced about 4 million ounces so far. It's probably got 10 million ounces. This trend produced close to 10 million ounces. The Hollinger McIntyre produced 30 million ounces. The dome through on or Delnite has already produced 25 million ounces. Now, west of Mountjoy Township, there's probably 10 million ounces that'll be indicated. So we're in an area where you basically have world scale deposits. And last year, the statistics were to find one of these gold systems, it cost about $350 million worth of global exploration funds just to find one of them. This is a better picture of our land position. I just staked another 15 or so, or 150 claims. What I'm really looking for is the extension of the dome system. It could be on the south side of the Dester or the extension of the Hollinger. And I think these systems have been jammed into the Dester. The Tahoe systems that are parallel here. My overall thesis is I think this section has just been moved north into Mountjoy Township. This entire area of Mountjoy Township for 100 years has been mapped as dead sediments. We reworked all of the data from the camp. There's a major porphyry system here, porphyry. You got the same Tisdale volcanics here that you have over here. So I think there's a good chance there's one or maybe two gold systems in Mountjoy Township. So I'm looking for the overall systems that could have 5, 10 million ounces. The question that everybody's posed, since 1980 is, why is there 100 million ounces of gold in Timmins? And because it's as much as the Red Lake and Kirkland Lake camp put together. And I think Mike White, a Newmont geochemist, solved that problem. He basically ended up with an alteration map of the Timmins camp. Here's Kidd Creek. If you read the latest papers on Kidd Creek, they say that's probably the center of a collapsed caldera. I think Mike White basically identified the rim of the collapsed caldera and where the Porcupine Dester Fault or the cross-country Matogamy River Fault intersects this rim is really where the giant sized gold ore bodies. Plan view wise, most of them are the system, like this system is 3 kilometers wide, 8 or 10 kilometers long. The Pamour system's the same. The Dome system's the same. The Hollinger system's the same. You've got almost continuous gold zones now west. But so what I ended up doing is a bunch of MMI geochemistry, and it looks like we could potentially have a system here and a second system there. Right now, since listing, we basically have drilled a half a dozen holes. I've identified 25 drill targets that we'll drill over the next couple of years. So we're methodically going through targets. The areas that we're exploring, even though we're in a proven camp, you can get a mile by mile sort of area with no drill holes. So you really don't know what the geology is. So we're methodically just going through figuring out the geology. We listed CTEC basically on an old drill hole that was drilled in 1939. We drilled a hole over top of it and drilled a couple holes in between. This hole from the old maps was supposed to be 50 meters from this outcrop. And what we discovered once we start clearing the outcrop off of the bulldozer is the outcrop goes further. So I've got to go back and drill another hole below that. We just finished analyzing 12 drill holes that were drilled through the old Thamar mine, 2 miles to the east of this. On the south side of the Dester, if you're as soon as you get out of the vein, you're into 10 parts per billion. Basically, there's no background gold around the vein system. So it's very easy to miss it. You either hit it or you can miss it. This is another typical type of example. What we do is we look at the geochemistry for the MMI. Here's a stacked gold type of anomaly. This is a mag profile on the same line. You got a mag low and a chargeability IP anomaly. So we have 2 or 3 layers of exploration data on the 25 targets. And now we have to sort of methodically go through and see which one of these actually identifies a gold system. In this area, I guess since 1910, I've drilled 24 holes, and 20 of them have hit anomalous gold, but we haven't hit a solid ore body yet. So, but over an area of about 1.5 kilometers wide by 4 kilometers long, we've hit gold in 20 different locations. One of these days we'll get into something that holds together as an ore body. Plan-wise, this is the same hole. There was the MMI. Here's the old drilling. So we've got airborne surveys, IP surveys, MMI, and now we're in the process of drilling the targets. This is immediately Mountjoy Township within the red, immediately west of the Hollinger, right here. Hollinger had a fault through here and a bunch of porphyries. We've from our airborne survey, did joint venture with a Cisco. We've got the same fault, the same direction as the Hollinger fault. All of these little lines that you see here were MMI lines. We did 4,000 MMI samples on our properties throughout the township. We ended up with a half a dozen gold anomalies in this direction and a gold anomaly here, 3 VMS targets. So we're picking up a combination of VMS anomalies and gold anomalies. And I'll show you the next one. When we reevaluated 81 RCD holes that were drilled at quarter-mile centers, this dead sediment package has a major porphyry, another major porphyry, Tisdale Volcanics. You got a 4-kilometer wide carbonate alteration package and a quartz vein system going through the center of it. So we've got all of the earmarks that that's what you'd expect. That's the size of the Dester type of controls. So I think once we get through and drill, say, 10 targets that we've got identified in that township, we'll totally change the geology. And the geology is probably much the same as the Hollinger-McIntyre. And we'll just keep methodically working away. And it turns out we've got the next slide I'll show is just this little part of the porphyry right here. Whoops. This is the MMI. We got airborne anomalies. We got airborne anomalies here. We did ground geophysics, so we got EM conductors. So when we did the analysis, we had a classical VMS type target. We ran a pulse EM, an old 40-year-old system over top of got a classical VMS anomaly. And we'll be drilling it in the next 4 to 6 weeks. So there's a good chance that we've got a VMS system next to a porphyry in what was supposed to be dead sediments. The 81 RCD holes, when they sampled the bedrock and the tills, had 2 copper gold trends, but they never found the source. I think our MMI programs basically have found the source. This is just another example, more over west in just south of the Kamoskosia mine, west of Timmins. We drilled off a high-grade, narrow. Unfortunately, it turned out, you ended up with really high-grade veins a foot wide. We did MMI. You end up with a bunch of MMI anomalies. There's a gravity anomaly, and now the white line. We've run a line of EM, and we picked up an anomaly on that. That'll be one of the next targets we drill. So when I say we've got 25 targets, they're all this type of background work, and hopefully one of them turns out. We'll just drill with one drill right through the year, other than spring breakup and fall, and so we'll be able to put out regular news. Just a summary, we've got a good land package, we've got a good database, we've got the funds in the bank to drill it. If you're looking at Timmins as a place to work, investors in Timmins have had at least 4 plays that they've made $100 for every dollar that they invested. For example, the Hollinger mine in 1920, you could have bought the stock for $1 a share. For the next 50 years, you'd have got $1 a share dividends. So that's a pretty good play. One of the old gold mines actually became Rio Algo. Kidd Creek, for every dollar you invested in, it went to $100. Hemlo. The largest, when Hemlo went to $20, the largest owner of stocks in Hemlo was investors in Timmins. So you have a good investor base there. What they need is a new discovery for them to really start playing the market. The thing is, in Timmins, you can get gold, you can get good VMS deposits, you can get good nickel deposits. Like Noble this week announced up to 500-meter intersections of 0.2 to 0.3% nickel, 8 miles north of Kidd Creek. So it looks like they're into a big ultramafic system that is 200 to 300 meters wide, 0.2, 0.3% nickel, and you could easily extrapolate to have 1 billion tons. So when you get those kind of plays in the camp, even with us as we go through drilling grassroots targets, we should have a fair number of investors starting to keep their eyes on Timmins. Thank you.
Perfect. Thanks, Charles, and thanks once again to all 5 of the presenting companies. Finally, to conclude the session, we will have our keynote speaker, Frank Holmes, CEO of US Global Investors.
Thank you.
Yeah.
He should be here like 10 minutes ago. He said I'm here in 10 minutes, so I think he's gonna be very soon. Just let everyone know about the
No, just let and yeah, appreciate the patience. Right.
So Frank will be joining us any minute now. I appreciate your patience, and just sit tight, and you'll be here momentarily. Thanks.
I'm happy to be here. We're all weeks ago. No more upbeat because it's a little bit crazy. You guys I got the same number of people, but last year there was a lot of people. This year was a little more optimistic. Where is it?
How's it going? Good to see you again.
Good. Sorry to keep you all confused.
No, of course. Okay.
So it was, I was really confused on the time allotment. My office told me it was supposed to be at 6.
Oh, okay.
And I got word, because call me, where are you? And I, holy shit. And I was in a board meeting, and I came running over here, and it was 7:10. And then I had family issues, so I ran uptown to Yorkville, came back.
Wow.
Got the family stuff done.
Just put that.
So just to kind of give you
All right.
bottom arrow for the slides, and this mic is outside. So that's why we're having the speakers trying to stay in.
All right. So get the beer and Chardonnay and come on back. Thank you for all your patience for waiting so long. Water would be fabulous. Thank you. Hey, Tommy, you got the Chardonnay? I'm kidding. I'm kidding. So I'm going to try to give you sort of backdrop. And so I write, as you know, many of you here every week, and I have a team behind me. The investment team publishes every week. And so when I'm traveling so much, I want to have something that was comprehensive but concise. So I wanted 3 sentences, not 3 paragraphs, that were a strength in the markets from last week and what were a weakness in the markets that affect your portfolio. And then what economic data point would be coming out next week, which and I have trend analysis done on them, that could be an opportunity or a threat. And that's the whole genesis of the writing. So we now have about, I think, 50,000 people in 180 countries that read, and a lot of investment people. And I like it because it creates a discipline. And so when I go to conferences, I can put things in relative terms. And one of my favorite factors is called PMI. And it's Purchasing Manufacturers Index. And it's interesting because when at the CIBC Whistler conference a couple of years ago, their head economist said, oh no, GDP is important, PMI is not. And I can assure you that whenever a PMI data point comes out, the pipes, they call them, between New York City and the Chicago commodity pits go on fire. The volume explodes as they're going short or long, rebalancing positions off of PMI data points. So I became curious in this probably about 15 years ago. And what I noticed when you do regressional studies is that if the 1 month for the global PMI is above the 3 months, there is a 52% probability in the next 6 months then all the commodities will be higher. If it is there for now another month, that the 1 month is above the 3-month average, now it jumps to 65, 68%. And if it does it for 3 months, it goes to 80. Vice versa, if the 1 month goes below the 3 months, all of a sudden it's actually faster. There's a 60% probability copper, steel, oil will be lower in 6 months. If it does that for 3 months in a row, it surges to 80% probability commodities will be lower in 6 months. Now, different commodities have different relationships to that sort of forward-looking trend factor. Oil is the strongest for China's PMI because China is the largest importer of oil. And China is 50% of the demand for all the world's commodities. So there are real simple macro forces everyone in this audience should just remember. If someone is 50% of all commodity demand, it's really important to find out what their trend is. It's real simple. If two countries are 40% of the world's economy, it's really important to follow those two countries, China and America. They're 50%, basically, just under 50% of the world's economic activity. And when you look at China and India, they are 40% of the world's population. So it makes it really easy to see in a portfolio, if you're looking at it, from a macro forces, which should you follow? There's so many different countries. Some can have an impact, but it's usually minor. It's more important to take a look at the big whales and their trends and what they're doing. Now, when we come to China, China follows Ray Dalio. Does everyone in the room know Ray Dalio? So Ray Dalio runs the largest hedge fund in the world. And it was fascinating for me, because if you've read his book, if you've not, then I highly recommend it. But I also recommend, how many here have watched his videos? 1, 2. Watch his videos. They are free. Okay? They are free. And they are animated. And he explains in segments of how he looks at the world, the economic model. And when I met him in '83, it was with Ian McAvity, and not knowing at the time at the Contrarian Opinion Forum in Vermont that he was going bankrupt. He tells it in the story. And I met him with, and I didn't know who these great people were, Peter Lynch. And it was called the Contrarian Opinion Forum. And everyone had a half-hour presentation. And then the rest of the audience, you had to defend your thesis. So it's like a PhD dissertation. And it was peer group analysis. And so he was a gold bug from way back then. But that bankrupted him because he bet on everything. And that allowed him to evolve, where he came out with his parity trade, where basically he's rebalancing all the time. And there's always gold in his portfolio. He also has, if you read about him, he has videos for every one of his meetings. And he'll come back and basically people have biases. And if they bullshit or lie, he has the video pulled back up. A lot of people find it very difficult because he holds you to such a level of candor. And he wants your ideas. So if anyone here has an idea, then expectations are that you're going to go back at least 10 years. If you go back 30 years of data, that's even better, and do a regressional study. And then, and only then, are you allowed time to speak to people. So me talking about PMIs, I can assure you, I've done lots of regressional work. Otherwise, he wouldn't let me speak in front of all of you. That's the way he runs his shop. So he's managing over $160 billion. And he's a force to really be respectful of. He is, the Chinese government follow him. Chinese agencies, etc., have money in his funds. And they follow his thought processes. And so I found that most fascinating because most other countries don't look upon him as being a thoughtful person. He's just a money, financial, greedy person. And that's the last thing that he is. So with that, I'm going to try to put some context for this presentation of my travels and what I see. So what's driving the commodities? Let me see if I got this right. No. Guess I have to do it The bottom one, okay, thank you. So one of the other parts of looking at forces of the world is trying to take simplicity. Everyone knows that the internet is zeros and ones. All coding, all languages come to ones and zeros, zeros and ones. And so in fact, you can take complexity and think of macro forces into zeros and ones. And so I take the macro forces of government policies. And in all my prospectuses in the US is a paragraph that says, we believe that government policies are a precursor to change. And that governments go through cycles. You go through what's called the populism, the left populism, and the right populism that's taking place. There are cycles, but really it all comes down to a binary model. The government policy is either monetary or fiscal. And monetary is either money supply or real interest rates. And fiscal is basically tax and regulations or spending. So now you can take all these little data points, etc., and recognize you can easily get your arms around big numbers. So unwinding of QE is good. Rising real interest rates is bad. Lower corporate taxes is good. Trade wars is bad. It's simple. Why is that? Because any tax or regulation on a system, any forms of regulation, will create a repression or a morphing of where capital flows to. Just like we're seeing, I talked about this, the number of IPOs has fallen 50% in the past 20 years. That's excessive regulation. There is a peak in the number of stockbrokers. There is a peak in the number of money managers like myself in America. They're all sloping lower. And it's just ongoing, increasing forms of regulations. And it grows from one factor after another, from AML, KYC, they grow. AML now is a $25 billion global line item for banks and brokers, $25 billion. So if that's a profit of cash flow, that's worth $250 billion in overall economic activity. So how is that moving where it's going? So it's trying to recognize the magnitude of that number. So China and India is 40% of the world's population. It's just so important to follow China and India. And I'm a big believer, this whole thesis of Trump coming to power, and it's a big shock. In fact, it started in India, in my analysis, because Modi was the renegade. Modi was the person that was going to take on corrupt governments. Modi was the one that had a province that grew at the same rate as China. There was so much corruption in the other provinces in India. It was Modi's Gujarat, which had the strongest economic prosperity in all of the country of India. And so you have to follow and what took place. He was first, and then China brings in a very strong-fisted leader. And what did he do? He went after all the they call them the wealthy military people that had kids driving Ferraris and accidents and corruption in casinos. So there was a crackdown on casinos. There was a crackdown on corruption. He threw half of the senior executive of the Communist Party in prison. And now he's wrestled himself that he is Mao forever in that whole sort of shift of power. But he's a strong guy. And everyone thinks it's just Trump. I assure you, it's not. And the same thing has happened in Poland. The same thing has happened in Czech Republic. The same thing has happened in Hungary. And guess what? Guess who the new central banks of the governments are that are buying gold? Poland, Hungary, all of a sudden buying tons and tons of gold. So there's a shift taking place. Putin was already in power as a strong man long before these other sort of processes shifts taking. So there's something that's happening, and can you see that? Can you sit back and say, okay, it's shifting this way? Then you have to sit back and say, what do you think the monetary and fiscal policies will be? Because that's how you make money. You make money in capital markets by understanding monetary and fiscal policies because they tell you the flow of money. It's all money just moves. And you know what happens, if money doesn't flow through your body, then all of a sudden what diabetes does, if it doesn't flow through your feet, you lose your feet. It has to flow. Money has to flow. Blood in our bodies have to flow. So can you understand where the direction, or do you know there's a blockage? Is there a blockage in the heart? Is there a blockage in the foot? What's causing that in global economic activity? The tariff war actually started with the Patriot Act. And it started with money. And it started with the AML, if you really take a look at it, and how difficult it gets more and more difficult to move money, and then it becomes products and services. So there's this transition that's taking place, and it all comes back to government policies, are a precursor to change. So now we take a look at, based on one measure, China's economy is now the biggest in the world. And that's when we look at GDP and a purchasing power parity. It's a real shocker. So if you really want to focus on what's happening around the world, you should really be focusing on US, China, and India. The rest is going to be noise. It's going to be short-term noise. And so that will impact anyone in the commodity business. So macro forces, so America and China, they're over 40% of the global GDP. So naturally, a trade war is going to have an impact. And guess when do you think global PMIs peaked last year? April. When did the trade war rhetoric start? April. All of a sudden, the turtles start pulling in their heads. They start becoming, protecting their capital, protecting their head. And that started that transition, that change. China, in December, went below 50. That was a real negative sign, because that means overall contraction manufacturing. But I believe this past month has turned, because China started pumping up the money into the system again. And they dropped now just to, I believe, yesterday, corporate taxes, trying to stimulate economic activity, which they will, because that's what they did in 2008. The global debt reached $244 trillion. That's a thesis for gold. And no matter what they try to do to suppress the price of gold, and now there's lots of courts that have proven that Deutsche Bank, and they've colluded, this with LIBOR, that they've suppressed the price of gold with the futures market. The biggest thing you do is called spoofing. You know when they do most of their spoofing? Chinese holidays. First week of October, celebrating Chinese communism. And then Chinese New Year. It's the big spoofing periods. And it's remarkable to see that you can trigger in the futures market a cascading down that takes place. But now they're back buying their gold in a physical number, and so is Russia. So I get this so often because I get asked it when I'm on the CNBC, in particular in New York. It's always negative on gold. Gold is a bad asset class. And I try to remind them that the DNA of volatility, that is 70% of the time, the daily volatility, the weekly, the monthly, 6 months or 1 year for gold is the same as the S&P 500. So how can you tell me gold is volatile? It's not. But gold stocks are. And gold stocks have a volatility of 3 times what bullion is. But so is biotechnology. And if you looked at the life cycle of a mine, and you look at the life cycle of biotechnology, one is EPA and one is FDA. They're exactly the same DNA volatility. You can't tell the difference. They go through 3 trials, 3 stages of a mine. It's remarkable. But biotechnology will always get much more money because we have an aging population. The demographics is a focus on that. How can we live to be longer? Especially all those old guys in the room. You know, what type of new medicine, what new procedure, what can we do to live a healthy, robust life? But during this period, since 9/11, when the Patriot Act came out, the price of gold has outperformed the S&P 500 almost 3 to 1. It shocks people. In fact, the naysayers for gold, and I like to use what's called the 10% golden rule. You should always have 10% in gold, and you should rebalance each year if you're running a diversified portfolio. And this is just a clear evidence of, over a long period of time, how well it's done. So now we look at peak gold. Global output expected to top out in 2019. And that creates a thesis that's very bullish. And what's shocking for everyone in this room is that a year ago, copper was much higher than today. And the deficit for copper is greater. How could that be? The only place where there's a deficit and the commodity went up last year was palladium. And copper and palladium kept rising. And why? Why? Because there's a deficit. and there's a pent-up demand for it. So for me, there's no factors around that can change this. You know, when you do fracking, which there was peak oil until the frackers came along, but when you have a discovery, the path to cash flow is immediate. The path to cash flow for a gold mine or a copper mine, it's still very long. And so that the thought process of a bunch of new discoveries coming on stream, that's very, very difficult to really grasp. CIBC did a great study years ago, and it still works today by the quant funds. If a CEO says, he did an analysis that my gold production is going to run up, it's going to grow by 12% next year. The average was minus 4%. Didn't deliver. To get a 4% growth rate, they had like an 18% growth rate. They had a forecast. They only came at 4. So there are so many delays and disappointments that are under control of gold producers to actually deliver that goal. And that's a risk, and that's a reality. So what's happened today is that 70% of all day trading are quant funds. And quant funds are very significant to recognize because how they apply artificial intelligence, how they analyze what's called NLP, natural language processing. How many know of this here? 1. So Google, 2. Google is all based on NLP. And NLP comes from Stanford University. And then NLP is looking for patterns of words. And so what has happened is that there are certain verbs and nouns and adjectives and pronouns that when mixed can give you a bearish, the predictive to something that's bullish or bearish, which can be for 1 hour to 7 days. So they call that the gamma. How long is this news relevant for them? And they will use things like 10-day high in copper, meaning buy the best copper stocks. They're the best fundamentals. 10-day low, I'm out. 10-day high in gold, they'll come and all of a sudden buy those gold stocks, which have the best quant model approach. And I'll explain that to you in a second. That's how the world's changed. And it hasn't come down to the micro cap to the degree because they can't get size for the liquidity. And that's what we're in a conundrum. Because I know a junior stock has big volume, immediately IROC's going to call, why is all the volume? It's like it's bad to have all the volume. And then on the other hand, if you don't have the volume, an institution's not going to give you money. Why? Because there's new regulations coming out in June in the US on market cap, on the daily trading volume relative to the market cap, that your stock is now deemed illiquid. And Merrill Lynch has come up with a thought process that anything under a $200 million market cap, no one can buy. Nobody. Doesn't matter if you have a $30 million account, personal account at Merrill Lynch, you cannot buy anything under a $200 million market cap. So it's creating this morphing of capital, and the quants take this data and they refine it and they load it up. So I'll give you a classic, simple analysis. Google will let you know if you say how many people looked up the word gold. And they will tell you the difference from last week. It's free for all of you. And that change, if it's positive, means there's more than a 55% probability gold's up next week. And if that change declines, just people looking at it, that number, then it's going to fall. So the quant funds are refined, people looking up quotes, and they look at data. So all the negative stuff on Trump, are people surprised the stock market is where it is? There's not one Canadian, I don't think, maybe Financial Post, maybe one writer, Comrade Black, that writes great stories about Trump. If you read the paper, you actually would be afraid to open the stock market. You really would. And I have friends that missed the whole stock market boom under Obama. What did Obama do? He put $700 billion fiscal stimulus into the economy. And do you know what Obamacare did? All the negative news, and all this healthcare stocks went up 500% in that 8-year period. It's not bad. It's a huge win in your wealth. So whatever's the negative prevailing news, you as a money manager or a stock picker have to almost go contrarian and look for really the biases of the media are so great that their political biases are so confusing to people trying to make money in the stock market. I have a young guy that under Obama went to 100% cash. It's amazing to see. And so now you get a bunch of Democrats now 100% under Trump, and the stock market's taken off. Forget all that rhetoric. Follow fiscal monetary policies. Follow where government policies are restricting money, move away from it, where they're putting money and directing it, go long. Go long. Because that's where money is going to flow, and you just want to be ahead of it. If you want to be front running legally, then you have to follow government policies. And that's what the quants do. They do it at a level that's unbelievable. They can read the Fed minutes, 250 pages in 1 minute, and compare it to the last 10 Fed minutes and all the word differences and sentence differences in 1 minute. It's impossible for anyone here to read 250 pages in 10 minutes and then come to an opinion. And immediately, because it came out a couple of years back that the head of the Fed came out and said, 2 words were not supposed to be there. The market had been taking off, and all of a sudden the market sold off. Impossible. How could that? But they have a probability to predict that the quant funds will go in and out. I know that Canada Pension gave to friends of mine 5 years ago in New York $500 million. And it's all quant driven. And now it's leveraged 8-to-1, and they've enjoyed a 25% CAGR. They will read every filing of every government, filing for every agency, and analyze it compared to everyone else. And the question is it money flows going in or out of that sector? Is it positive or negative for that economy, that part of the economy? We take too long to digest that, and that's how our world's changed. So if you listen to the media and think you're going to have a competitive advantage, you're screwed. So with that, most of the analysts listen to all the gold stock CEOs coming in. Our gold is going to grow at 8%, 15%, 6%, 3%, and then they forecast off of that. But remember, they don't deliver. So I'm of a big opinion that it's going to continue just like palladium. So Barrick Gold reports lowest quarterly output in 16 years. Now, if Barrick gets control of Newmont, what should you do? Kick it out for several reasons. Mark Bristow at the BMO conference last week refused to say he would be in the US, his head office. You know what that means? You kicked out of the S&P 500. What do you think is going to happen then? And if Goldcorp gets bought by Newmont, what do you think is going to happen then with index buying? It's $1.5 billion. You've got to come in to buy it. So you have to now look for money flows off these indexes and ETFs as a money manager to understand will it move the dial positive or negative. They have to go and buy these other assets. They have to do these mergers. And you know, if they did get control of it, they're going to have 14 million ounces of production. How can you replace that in a year? It's impossible. It's so hard to go from 100,000 to 200,000 or from 300,000 to 600,000 ounces of gold production. How do you replace 14 million when there hasn't been 3 discoveries of 3 million ounce deposits? There's no 14 million ounce deposits been found. You know, and if you had a 14 million ounce deposit at a high enough grade, it would be a huge, huge win. That's 1 year of those combined companies' production. So Murphy's Law is against them. So you have to recognize, because they're mega, because how big they are, and then turn around and pivot where the mid cap and small caps are. So one of the things I did is I created an ETF because I saw the fund flows weren't coming to my gold fund, and I outperformed Vanguard. So I outperformed Vanguard last year 1, 3, 5, and 10 years. But Vanguard was much bigger. Do you know why? Because it's cheaper. So what's happening in America is that performance does not care. It's not the tipping point. It's all about what cheapest is best. 90% of all ETF flows in America were for ETFs under 10 basis points management fee. not the better performing ones. So you have a shift of fund flows. So where will the pockets of opportunity be, and what do you have to be recognized? And so what happened is that Vanguard blew out $2 billion. They got out of the gold business at the very bottom. They blew out $2 billion of gold stocks, created some of the biggest turnover. And so I recognized that, and so I realized it wasn't getting money. So I created an ETF in New York called GoAU, and then I replicated here in Toronto called GoGo. And it's a quant approach. And that one gold fund manager outperformed it last year in the US. It's shocking, isn't it? They outperform it. It's based on a two-part quantitative approach from its macro structure of how it rebalances itself from top to down, and then how it picks stocks from bottom to up. And how, when I learned this from Jets, creating the Jets ETF, is that 80% of the Jets ETF are US companies, but 70% of the names are foreign. There's no odd numbers. It's all 1%, 2%. Why was that? Because it stopped currency volatility friction, which can impact you. I discovered this by spending 8,000 hours of scrubbing data. And I can take a factor and use Bloomberg and Thomson Reuters and Morningstar, and all come up with different names if I go back 10 years. So the data is not, it forgets the name change, it forgets a merger, it forgets a spin out. So you have to go in and really dig deep when you're doing quantitative analysis. So with that, I launched it. It's done exactly, outperforms the GDXJ over 90% of the time in rolling 12-month periods. The iShares here is a joke for the size of it is. It's outperformed it 94% of the time on rolling 12-month periods. But that's where money in Canada goes. It goes into the iShares gold index, which is irrelevant of shitty stocks for good stocks. It doesn't care. And that's a big problem with the S&P 500 because money is going into bad stocks with more money on valuation metrics and less money into good stocks. So the active manager is all of a sudden being squeezed away from catching those opportunities. And what will happen is that when you get a big correction is when they start to do what's called a big mean reversion, where the actuaries and the pension funds all rebalance their debt to equity for the pension funds, and the stock market overall, there's no depth of the market because there's been a big drop in IPOs, and there's been a huge amount of stock buybacks. So actually the float is shrinking. It's not only people putting their money into these ETFs, the number of shares outstanding is shrinking. So what happens when they want to sell to rebalance? The market's not there. There's no active managers. So this helps you to recognize. So along comes this company, and the early investors were Eric Sprott, Rob McEwen, and they approached me because I gave a speech on why gold stocks fall in 1 hour. Why did Eldorado fall 27% in 1 hour? Well, research has showed before that if you had these words in your press release, it took 2 weeks for your stock to fall 27%, not 1 hour. It's because the quants turned around and started shorting immediately. And the same thing will happen on the upside or the downside. They've digested every news factor and what word choice that NLP, they immediately move with their assets. So these guys came along and they said, you know, we've been spending money and Hopchild approached this and we're doing all their work. And they also bought 10% of our company. And we're looking at creating a model that we will go and invest in juniors, but only juniors that we've done all this quantitative analysis with. So I go to Montreal and you meet these young girls, 29 years old, with a PhD in Monte Carlo simulation on geophysical, on tectonic plates. What? There was a speech at the PDAC, and the packed room was a young kid, 6'1". His both parents were geophysicists. He has his PhD by the time he was 25. And he wrote a white paper of how you can minimize exploration risk. You can basically, you don't find the sweet spots, you eliminate garbage drilling. And for some of my old friends that I see, do you remember ISG Technologies? So ISG Technologies is the last technology deal I did when I left Canada in 1989. And I loved it because they could take a CAT scan and take all those x-rays and then create a three-dimensional model. So only 2% of surgeons like great athletes, and only 2% of architects can rotate this glass three-dimensionally in their mind. They can close their eyes and rotate. So that gifted surgeon is the one you wanted operating on you. So ISG technology all of a sudden was able to say, you shouldn't go into the shoulder, surgery in the shoulder with a 6-inch incision. You should only go for a centimeter over here, because they couldn't rotate, but ISG could do it. So this became a big win, and because it could rotate. So what happens to geos? How many geos in the room? A couple. So geos will know, and especially guys at the white hair with the vintage geos, and you know that you can oversee 4 different types of maps, and you can turn around to guesstimate where things should be for drilling by processing 4. If you're not a great geo or you're a young geo, you can do 2. If you're really gifted like an athlete, you can do 4. If you're like a Wayne Gretzky, you can do 4. So these AI comes along, they can do 50. That's the game changer. And they're all geoscientists. So Goldcorp turned around and gave IBM $5 million a year to use the Watson. And that was a big problem because IBM has no geoscientists. So they're always phoning Goldcorp for their geoscientists and their geos, et cetera, and engineers to interpret the data, because the data always has to get scrubbed. So these young kids took all the data from Quebec that was public, and then spent $800,000 cleaning the data. As soon as they told me they spent that amount of money cleaning the data, I could relate, because I spent 8,000 hours cleaning the data to create a smart beta ETF that performs. And so this is the new world. And that's why I said, I'll invest personally a couple $1 million. I'll go as a chairman, because I have 20 scientists and they're all young. So they had their first party over here at the vault. Anyone make it to the vault the other night? Well, I was really happy. I was the oldest guy. And then I went to GMP's function where I was the youngest guy. Yeah, you got to understand this transition is taking place. And Hochschild said it's helped them have many discoveries and stopped that they were wasted of exploration. Eric Sprott said it was a big thing for him when he bought Florida Canyon. He talked about what is helping him. So he put another $1.5 million into it. Elliott Management is the famous hedge fund that took on the government of Argentina. They bought $35 billion. They created a royalty company here. It's called Triple Flag. The CEO there was a former CFO of Barrick. They bought 10%. So this is a new company that has myself and Eric and Triple Flag and Hochschild owning 40% of the company. And it's got $10 million. It's profitable. And we've already taken, so we've done work on properties, and we get back a royalty for it, and they have to go drill what we identify as a target. So we'll give you $500,000. You'll turn around and spend $300,000 on the targets we're going to identify for you. So that, and then we get a royalty on those on particular grassroots. So all of Newfoundland has been downloaded from satellite imagery to soil samples, whatever. All that stuff has been collected and goes through a very complex algorithm that's used machine learning. And machine learning means that every time new data comes in, it starts all over again, applying that data, and it becomes smarter. That's the whole idea with it. But only because of the cloud can we do this. The cloud is allowed. If you didn't have the cloud, you would not be able to create this AI phenomena. How many have the new iPhone? So a friend of mine has his iPhone and he has an allergy breakout and no longer does it recognize the station. He can't use his iPhone. That's all AI. That's all looking at the granularity of your face and identifying that. And the same thing with your thumbprint, your fingerprint. So now those concepts which you take for granted in your phones or Sirius or Alexa, etc., is now being applied to this space. So I'm really thrilled about the opportunity of being with young people because it forces me to. Denny was here younger. He was here earlier, but he has a 1-month-old baby, and he spent every day from 7 to 11 at PDAC. And his wife said, "Get your ass home." So he's not able to be here. But he's a young geologist that worked in Kirkland Lake. He worked at Goldcorp. He worked in Finland. He worked in West Africa. So by the age of 33, he came in to turn around Pine Tree, was a disaster. He cleaned it all up, made all the debt horrors whole, and he's got tremendous capital amount of experience. And being mentored by Sheldon Immontage is literally being baptized in fire. Now, Sheldon was the early investor that believed in this also. So Sheldon was very smart in betting on young guys like him, and his personality was allowed him to get all these young people. So we now have 9 PhDs. You know what a PhD is worth in Silicon Valley for coding? It's worth $10 million for fundraising. We have 9 and 11 other scientists. And it's so big in Montreal, which I didn't realize, is that Microsoft is opening a campus and building and hiring 5,000 people. This is going to be their AI center. And there's an Israeli professor, McGill, that's basically launched all this. There's a company here in Toronto called Elements. And they got $100 million from Google, and they have 500 of these PhDs writing the algorithms for the banks that are doing all their research and all their pattern recognition for credit cards, etc. So it's a new world. And it's young, and it's vibrant. And I think it's probably the best thing that's going to attract millennial investors. I believe that copper, it's amazing that copper's lower than from a year ago. I've got this asthma, and this cold weather really knocked me off when I came back. I'm from here, I've become really sensitive to cold weather. I think that those junior stocks that we've bought almost 15% of a company like Copper Bank, because in situ copper, it's got 38 pounds of copper per share and trades less than 10 cents. So we will speculate with optionality, and then we'll buy other stocks that are the cheapest operating cash flow, the enterprise value, or where the revenue for the last quarter is above the average for 4 quarters. So copper prices are projected and the widening supply deficit. And if you believe in AI, you have to have GPU cards and you have to have data centers, and the world's going to get rewired. It needs copper, copper, copper. So it's a very important part of this whole electrical build-out that's taking place globally. Electric vehicles use more copper, and China surprisingly leads the way. And if you look at all the new hybrid cars, there was like 50 of them, and coming out this year for the models, there's over 200 hybrid cars. And all those hybrid cars use much more copper. And if it's pure electric, it's even substantially more. Everyone's consuming the fascination with lithium, but copper is the magic metal. So quants are driving gold stocks. So I created this approach, and this is to give you an idea about GoGo. In the past year, it's up 9%, and the iShares is minus 16. So why the hell would anyone go buy iShares? Why does it have $800 million? It's ridiculous. It just doesn't make sense. And I've got regressional work that goes back 15 years on this approach of looking at capital markets. I've also done it on the juniors, but what I found with the juniors is the liquidity event is so important. So you really can't get much more than 20 names. And if you really want to use smart, intelligent factors, you can't use more than 10. So in the world, there are 88 global gold producers. And to have a mutual fund in America, you have to have 21 names. Can you tell me 21 great CEOs? Can you tell me that there's 21 of those companies growing their revenue per share, their production per share? Not happening. So if you want to go beat that, you have to actually go to concentrated portfolios. If you want to go to junior speculative exploration companies, you have to have a simple algorithm. The reserves plus the cash minus $300,000 for operating overhead for a year, divided by the shares outstanding, and by the greatest value per share. And if you rebalance those 10 names, max 20, you'll outperform the Vancouver Stock Exchange all the time. But you can't build a fund around it. I can't build a fund. It lends for individual portfolios, or a small hedge fund can actually create alpha buying the micro caps. So buying cheap reserves with big institute that have cash, then the odds are like a copper bank, it can give you optionality. And who was the first guy to make a ton of money with this was Ross Speedy when he created this big silver, Pan American Silver, was all based on optionality of silver. And then he did it again with copper, with Lumina. He bought all these copper projects when copper was 70 cents that were not commercial to $2. And he bought them for $3 million, $800,000, and they were selling for $1 billion when copper hit $4. And then he distributed them all, and he owned close to 30% of the company. So you can make money on optionality of companies. And when you do that, you have to make sure that CEO is not raising money for his lifestyle. And you have to differentiate that. And that's one of the biggest flaws in the small cap space is funding lifestyle investing. And so there's many great small cap stocks that have just a bucket of resources behind them. And I think if they turn around and do AI, they contract for, and what we're doing for the big companies, artificial intelligence with Goldspot, the ticker is easy, it's SPOT. But if you use those services, I think you can turn around and get probably 10 times your spending dollars. So you would probably, $1 million budget be like spending $10 million because it de-risks a project. That's what the special is. So I write, as I told you, go to US Funds if you're not a subscriber. I highly recommend that you do. It's free. It's the best price. The only other thing that's free is to smile. That's free. So thank you all, and hope that this year, by the way, this year was very bullish this time last year until PMIs peaked in April. And now I hope that the China can go for another month. Then that means everyone's negative, and we'll get a positive turn going into this year. Thank you. Any questions?
On less commodities, let's say.
Yeah, I think that zinc was the first to really get hurt with the PMI broke and with the trade war, because it impacted construction and cars. And now we're seeing all the negative news on cars coming out. So zinc is so important for that boom. I think U.S. interest rates go lower. I think zinc has huge leverage on the upside. And I think it's just some of the, there's a lack of big production that's out there that's coming on stream.
Have you looked at cement for monitoring the Chinese economy or the North American?
Yeah, we have, and there's much more significance, much more district specific. So if Texas comes out with a big road program, buy all the cement stocks that you can that are public in Texas, because the cement's not going to get trucked from Seattle. So you have to think about location, like real estate when it comes to cement. And you have to really look at government spending that drives that outside of a housing boom. But you cannot do this in New York City or Ontario. No. And I'll tell you what, there's a reason for it. In Texas, the roads are the best in the country. You know why? Do you know why? Because there's law. That when you pay those pennies at that petrol station for your gas, for that state, that tax, that petrol tax for the state, it can only go towards the roads. It can't go to a social welfare program or something else, maybe in this idea or that idea. No, it's only for the roads. So they create job programs, and they have pristine roads, and they're all developed by Texas A&M University. So that's why. And I found driving back and forth between Canada, my sons were at Western, how bad the roads were in Michigan and Illinois. Like, you just fall apart. And the same thing in New York is because those state tax dollars were being diverted away from road construction. So that's my little experiences, tacit knowledge. Any other questions?
U.S. balance sheet going to stop going down?
He's already mentioned they're going to slow it down. And that created the volatility in the stock market. So that's going to slow down. And there was a mention today that the government is even considering negative real interest rates if the economy slows down. So that $244 trillion, it's not going to evaporate. And so it's just, that's what it is. How many here know Jordan Peterson? How many don't know who Jordan Peterson is? Really?
Yeah, I'm not transgender.
Really? You don't know who Jordan Peterson is? Well, I didn't know. I could tell you the truth. Don't feel bad. I didn't know who he was 6 months ago. But he's a PhD, the clinical psychologist from the University of Toronto that has only 30 million YouTube viewers. 30 million. And he's become ranked by New York Times as the top 50 most influential people in the world. And he's anti-PC. And he says it ushers in dictators because PC movement is in Russia. You can't talk negative about, you can't have free speech. You can't talk negative about Putin. And in China, you can't talk negative about the political leaders or the Communist Party. And eventually that's what happens in every democracy. Like, so eventually you can't offend anyone and everyone's offensive in some form or fashion. So if you don't, it's really fascinating for me because I didn't know, it's life is all about that. You just learn from going out and hearing from other people how significant he is as a person. And I was oblivious. So I could be oblivious about zinc. I could be oblivious about copper. So you have to be humble. You have to be humble. You don't know. And you have to realize, and the other part, you have to be really curious to find out why things are happening, what they're doing. Martin, I don't know. Pardon me?
So given that you being a Canadian, what's your thought that your thesis of 50% of all commodities are bought from China? We're a commodity country that we arrested the third most powerful man's daughter in China in Canada.
I don't know. I think, Justin Trudeau does not give two hoots about the mining sector, the oil and gas sector. And that's the reality. And he just doesn't care. And that's the real sad reality. He's not Trump in respect that Trump wraps himself in the flag. And then that's a big, big difference. When you fly in America, I fly business class. I'm always got to be after women and children, and after active military, and after anyone that has a wheelchair. That doesn't happen here. You won't see Air Canada saying, "Oh, all the active military people, please come up here so you can come on first." No. And if you get like 6 young kids coming on that are active military, you know what they do when they get on the plane? They clap. Unbelievable. As a Canadian living in Texas, and San Antonio is military city of America, they call it. It's a different world. The other cultural difference I'll share with you in America is that everything is a drop puck. Everything. Everything is so competitive. It's really hard to grasp. And political correctness is everyone gets a ribbon. No one can lose. The idea that if you're too tall, then we'll cut off you at the knees. It gets so stupid, the process, but it doesn't happen there. And you know why Amazon left New York City? Do you know why? Justin Trudeau must have negotiated the contracts because it came out that it was all PC driven, and Amazon refused to deal with all those issues of repositioning. They believe in meritocracy. They believe they need the best skilled person to do the job. And they don't care if it's male or female. They don't care tall or short. That's how they function. So in the US, if your daughter is a spelling bee winner at grade 7, Duke University will write her a letter to come to their free summer program. Is that going to happen here? No. If your son is a grade 7 champion chess player, He gets a letter from a university for math to come to Duke also study math with all these other kids that are science or math and chess champions. So the idea of that, the ghetto, you have to be a great athlete. That's the process, unless you're a great chess player or you're a great spelling bee. And so it's a very different world than Canada. Everything is meritocracy. And you may not like it, but it's just what it is. And then that's the differences when I go back and forth. And I love both. You know, I really admire and respect both differences. And you have to, as a global investor, I have to go in and navigate through all these countries and cultures. And I have to recognize there's certain places like Franco-Nevada will not invest directly in countries where it's just civil law. They go through a public company in a Canadian or anywhere there's common law for rule of law. And rule of law is very important as a global investor. So you recognize those parts. And so that's the big difference. It's everything is a drop puck. And if you put your head down and you're a hockey player, what happens? You get hit. And that's what it is. Thank you very much.
Great. Thank you very much, Frank. And thank you again for all of our attendees. For those of you that joined us in-house, feel free to stick around for some food, networking, and drinks. Cheers.
Yes. Oh, really?